Hello and welcome everyone to Almus Market Mornings, your daily dose of financial updates. This is your host Swaraj, and with me I have our in-house money market pundit, Mr. Pankaj Rathi, who will take us through the developments of the day. Now, to begin with, the Russian stock markets opened after nearly a 1 month of closure, with the index being up nearly 9%. On the bond index front, we saw the global bond indices sell off intensify, with the index being nearly down 11% from all-time highs. We saw US stocks rally with S&P 500 being up 1.4%, even when the markets are pricing in a 7.74 Fed rate hikes this year. So Pankaj, we are seeing bonds fall, equities rise. What is your sense of these events being played out?
Hey, thanks, Swaraj. It's basically market is getting increasingly confident that the rate increases are more because of growth and basically economy going forward will be higher and the inflation will be taken care by once the RBI with the Fed rate hikes are in place. That's the being more like a theme which market as of now following. Now, looking at the overall equities growth, equity market going up is basically there's a continued good news on the economy side. US indices are posting great days after ignoring the chorus of Fed members calling for faster pace of rate hikes. Bargain hunting of a beaten down stocks supported a good amount of rally. It is a session by session approach as of now, who are now ignoring the continued war situation in Ukraine and prospects of higher rates. Coming back to Russia, first time in last 1 month it opened the stock market on yesterday. It opened almost 10% higher, but I think it settled around 4.5% higher. Russia's central bank had banned short sales. Foreign investors are not allowed to dump shares, and provisions that could support stock Russian currency. Ruble also strengthened beyond 100 against USD. If you see the entire development and basically the currency which has taken maximum beating is yen, which has declined for consecutively third week and now traded today morning it traded as low as 122.43, now trading at 121.70 against USD. Gold, which was consolidating for last couple of days, has again rebounded from 1905 and it has come around 1965 and it should be holding around these levels. We expect a slow but firm up trend for the yellow metals as more and more investors would be looking to move away from bonds and maybe gold would be a place where they will hide for some time. Now coming back to Ukraine, Western leaders actually met in Brussels on Thursday and they agreed to strengthen their forces in Eastern Europe. They're increasing military aid to Ukraine and they are looking to tighten more sanctions on Russia. The failure by Russia to quickly overwhelm Ukraine's military raises the risk what Western intelligence says vertical escalation, and that can be deadly for entire Europe. The fear is that Mr. Putin, instead of buckling down due to severe economic stress on the country, may actually escalate the attack, the choices being blanket bombing of Ukraine cities or the use of chemical weapons. I don't want to term the third option it is, but it will be against the humanity. Dollar is actually fundamentally well supported due to widening rate differences. Our economy performing strongly and sustained safe haven demand. So in a shorter term, it looks like dollar would be well supported. Now coming back to our currency, as we open today, there's few positive factors. Dollar index is little lower. Crude prices have gone down by 3%, and overall there's a risk sentiment improvement because of equities also done fairly well yesterday. But these all should be kind of a temporary positive sentiment. After the quarter end and financial year end, the flows after that would be deciding how it will be going ahead in the dollar rupee. But what we can say that the earlier looks like the estimate for the India's trade deficit for the month of March, it also be likely to be more than USD $20 billion, which corroborates with the skew in favor of demand of dollars in medium terms. The key to how much this can affect USD INR in coming months depend on the investment flows and RBI's approach to overall currency. That's all from me. Thank you.
Okay, that was great, Pankaj. And as we are seeing, markets are getting increasingly confident as there are increasing prospects of growth and expectation that inflation will be taken care with rate hikes. There could be many developments during the weekend as well. So, guys, it's very important we manage our risk till then. I will see you all next week. Thank you.